For now, Dipan Mehta is joining us. He's director at Elixir Equities. Dipan, hi, good morning. Thanks a lot for joining us. Dipan, I wanted your thoughts first on what's happening with the banking stocks. Again, leading the market. Which ones would you buy at current levels?
Good morning, Anuj, and thanks for having me on your show. Clearly, I think banking sector is taking the leadership position, and rightly so, because I think the best corporate numbers for this quarter and the next few quarters are going to come from the banking sector. They are the benefit of base effect, credit is growing, and credit costs are going to come down significantly. So I think that you will see exceptionally good numbers coming through from all the banks. I know there's a temptation to buy some of the tier 2 banks, tier 3 banks as well, and you could certainly trade in them, the likes of IDFC First or RBL or Bandhan Bank per se. But I think the large part of the portfolio has to be in the large cap banks. The top pick remains ICICI Bank, followed by that is Kotak, HDFC, and Axis Bank. I think these 4 or 5 banks should be amongst the top in every investor's portfolio in order to at least get returns in line with the sensex nifty or beat them. But there will be trading opportunities in PSU stocks, PSU banks, as well as tier 2, tier 3 banks.
Okay, PSU stocks, PSU banks and tier 2, tier 3 banks, all right. There's also a lot happening in the consumption space now, Dipan. Things have come back, demand has gone up across FMCG, autos, consumer durables. What would your top picks be in this space now?
See, I think a lot of the FMCG categories are reaching maturity phase. And for large FMCG companies, the likes of HUL, Dabur, Godrej, it'll be very difficult to get double-digit volume growth. At best, they'll get a mid-single-digit kind of a volume growth. And then a little bit of price increases to cover the costs would mean that their earnings for many, many years will be in high single-digit to mid-single-digit or so. And that kind of a proposition doesn't really be attractive to us at this point of time. Consumption has to be played slightly differently through real estate, through automobiles, through building materials, entertainment. I think these are the new consumption centers as far as the Indian economy is concerned, and not the traditional ones like FMCG. So I'd like to go for the winners over there. You could add retail also to it, the likes of Titan or that matter Trent or V-Mart. I think there are so many choices now available when you want to play the consumption story. And I don't think FMCG is the best way to play that.
Dipan, hi, good morning. It's just just a one-off observation, but last couple of days, at least I've been observing many of these, 5, 10, 15 rupee stocks starting to fly, right? Now, by itself, maybe it doesn't tell us very much, but given the fact that there is generally such large, retail seems to be back, right, in full force. Does that, is the need for caution here? I'm looking at names like, for example, Suzlon, take Reliance Power, take, so many Dish TV, may have some turnaround stories here and there, but what do you make of it?
Good morning, Prashant. I think this is a complete bull market, and one should expect this kind of trends to take place. So there is really nothing surprising about it. And who knows, some of these low price stocks could not be multi-baggers also going forward or so. But investors by and large have become cautious. I think we have seen in this last bull market that hardly any investors have got burned with stocks which have been operated by operators or by nefarious companies per se. I think by and large the culture has improved significantly over the past few decades or so. And I don't think investors are sucked in that easily to these stocks. Traders will keep on buying into these stocks in the hope of making a quick buck. But as I look at investors' portfolio, I think largely, I would say 70-80% is in good quality stocks. And there's always this, human urge to gamble in some of these low price stocks. But I think it is well within limits. So I'm not that concerned about these, kind of penny stocks moving up at this point of time. It happens all over the world, but the risk and damage from those kind of stocks is very much restricted at this point of time.
Okay. All right. Just wanted your views on there's a new listing today, right? Dream Folks in the aviation space. It's an integrated service provider. Are you expecting this to be a good one? Have you tracked it? And anything in it for long-term investors?
Yeah, absolutely. I think, Sonia, it could be a bit of a concept stock as well. And you want to try and play the travel theme. And if you look at the choices around you, apart from hotels and aviation, there's no really there's no real stock which one can play to kind of ride the investment theme as far as rising travel thing is concerned. And maybe this particular stock could help you get into that particular specific investment theme. Airlines, in any case, I think there are many challenges, many variables, too much of competition. So one could avoid that sector, and hotels per se are very high in terms of capital intensity. And over there also, there's very little choice. But maybe this company certainly will provide a good opportunity. And if you look around you travel to any of the airports, all the lounges are absolutely packed. And that certainly is very positive for Dream folks. So I know it's expensive and you could have a very good listing as well. But I think once the stock price settles down, it would be a good company to keep on your radar and on your market watch list.
Oh, absolutely. I mean, no comment on the IPO itself, but the company looked quite good, and the management was on air, and I mean, I was really, I mean, I think first generation entrepreneur, and looked quite confident and knew about what she was doing. So let's see how things move here. Expect it to be a good listing over here as well, of course. Deepan, the space which is doing well is capital goods. I mean, one of the spaces doing well. The capital goods index yesterday hit an all-time high. Your view here and any stocks that you like here?
Yeah, no, it's very positive on capital goods sector per se. I think we are seeing revival in the capex from private sector, PSUs, as well as the government. And if you look at all of these companies, they're sitting on huge order book position. And one should have some allocation in your portfolio towards the capital goods sector. Our top pick still remains Larsen and Toubro. They have been very selective when it comes to choosing of projects. The way they have managed their capital allocation also has been very impressive. There is scope for unlocking of value in these subsidiaries, especially the infrastructure subsidiaries, which have been a bit of a drain on the balance sheet. But once they are off, then the quality of the balance sheet may improve significantly. And it's an excellent company in terms of track record, in terms of implementation. There are certain projects which only L&T can do in this country. So very positive on L&T. I think it's a must-own stock in any portfolio. Another company which comes to mind is ITD Cementation. The stock has been hitting new highs lately. Again, a quality player within the capital goods, the EPC space, and I would say pretty decent corporate governance standards as well over there, because that's a bit of a challenge when it comes to these engineering construction companies. So positive on these two companies. Again, a disclosure here that we and our clients are invested in both of them.
Do you track Dodla Dairy by any chance?
Sorry?
Do you track Dodla Dairy?
I'm sorry, I didn't get that.
Dodla Dairy, the dairy company?
No, not really
You
over
don't
there.
track it.